It's time for our terms of trade, our weekly dive into the state of globalization. Consumers have been pretty resilient in multiple parts of the world, but how long can that last in the face of geopolitical tensions, election risk, protectionism, and of course tensions in the Middle East? There's a lot to talk about when it comes to the impact on trade. I want to bring in our exclusive guest this morning, Ralph Ossa, the chief economist at the World Trade Organization, joins me this morning. Ralph, a pleasure to have you on the program. Thank you so much for joining us. Let's start with the story about globalization. Good morning. We're hearing a lot about this idea that we have a lot of election risk. There's a lot of bringing manufacturing capacity onto U.S. shores, onto Chinese shores, into Europe. These ideas of deglobalizing, how much of a risk is it going into, I think, 50% of the world's elections this year?
So when we look at the data, we don't see any signs of deglobalization, or at least not any signs of any massive deglobalization. But what we do see is first signs of fragmentation along geopolitical lines. You mentioned the U.S., and if you look at trade between the U.S. and China, for example, what we see is that the trade between these two economies is going by 30%, is going 30% slower than trade between the U.S. and China and other economies, for example. So there's a shift in trade shares away from China and the U.S. So that's one way in which we are seeing this fragmentation. But you also see it more broadly. So it's not just a story about the U.S. and China. One thing we've done, for example, in our analysis, we've separated the world into two hypothetical geopolitical blocks based on voting patterns at the UN General Assembly. So one block of countries that tends to vote with China, and another block of countries that tends to vote with the US. And what you see, if you look at the data, you see that the trade within these blocks tends to grow more slowly now than trade between these hypothetical blocks, again, adding to this overall picture of first signs of geoeconomic fragmentation.
Well, as we talk about that fragmentation, what is the read-through then on the consumer? Do you see some sort of decrease in shipping activity because everyone's kind of doing their own thing? How does that serve or not serve the global economy?
Well, it's not so much everyone doing their own thing, so we don't see so much home shoring. We really see a shift in trade patterns, I would say. So from the US perspective, for example, not importing that much anymore from China, instead importing from other countries, Mexico, Vietnam, and so on. I mean, one interesting pattern that we're also seeing in the data is, to some extent, there also seems to be a diversion of trade flows. For example, Mexico is importing more from China, and then the U.S. is importing more from Mexico. So it appears, at least, that some of these trade flows are also just being diverted.
So we're talking a little bit about kind of the North American sphere. I want to bring it right back here to Europe and to the Middle East in particular. As we talk about kind of some of the tensions around the world, we talked about the election risk. We're also talking about geopolitical tensions in the Middle East, in the Red Sea. If you talk to corporate CEOs over and over again on this program throughout Bloomberg Television, the theme seems to be we're not seeing a read-through just yet, that the kind of trauma of the post-COVID era, the supply chain crunches there, have created some sort of resiliency in supply chains as well. How long does the conflict in the Red Sea need to go on? Where do you start to see a breaking point in some of these supply chains?
Yeah, so first of all, let me say that's also my assessment at the moment. Even though the Suez Canal is of course, an important trade route, we also don't see any major effects so far, other than, of course, that a lot of trade has to be diverted. For me, the main risk to look out for really is whether the conflict escalates and whether this is going to start affecting energy markets. Because if you get that, then of course you can have a more important knock-on effect on the economy. But I think the reason international trade is coping quite well, or is quite resilient to this shock, is because we have a good amount of shipping capacity at the moment. So the constraints in the shipping industry are not what they were during COVID. So shipping companies can absorb this extra work that they have to do by taking the longer route at the moment.
So resiliency, sure, in shipping, and that in terms of excess capacity, but a lot of the ways that this is tackled is done through excess fuel, excess labor, rerouting around the Cape of Good Hope, among other ways, rail lines, for example, getting more traffic as well. A lot of those costs are passed on to the consumer, though. So in this era where you are seeing consumer resiliency around the world and strengthen the economies, that makes a lot of sense. If this conflict lasts years, for example, and you see the same issues passed on to a consumer amid a weak economic backdrop, would that see a bigger result?
Yeah, no, of course it's not helping, and it's especially not helping Europe. I mean, one thing that we've been seeing, of course, is that the US has been doing better than we expected. Europe has been doing worse than we expected, and as a result, global trade has also been doing worse than we expected. And of course, these tensions that we now see in the Red Sea, I mean, they affect the whole world, but they particularly affect Europe. So if this is going to last for a long time, at some point, you're also going to see it in European consumer prices. But at the moment, in a way, the weak demand in Europe is helping because they at this point at least import demand is not so strong anyways. So of course the demand for products that go through the Suez Canal is also a little bit less than, for example, we saw towards the end of the COVID crisis.
Ralph, a final question to you. I'm putting you on the spot in about 30 seconds. We're talking about this import demand being fairly weak. Let's talk about the currency impact as well, coming out of China, out of Japan, out of Korea, that are still really dependent on those export revenues. What is your read on the currency impact on the global trade situation? 30 seconds, if you can.
So we haven't, the currency impact is really not something that, we are analyzing in depth. So I don't think I can share any interesting information here with you. I can talk a little bit about China, and what we've seen at least is that China has been holding up relatively strongly. At the beginning of the year, there were concerns, or even towards the end of the year, of course, there were concerns about the property market in China and how this would affect Chinese growth and Chinese trade. But at the moment, that doesn't seem to be affecting the global economy too much. So what we are really looking at the moment is the situation in Europe.